Okay, if you guys can got it on the screen, so this thing is recording. Today is Monday, July 19th, also known as Juneteenth, U.S. holiday. So since it's a U.S. holiday, it's actually a U.S. bank holiday. And I think that's the key thing. Having a holiday like St. Patrick's Day or something like that, or Cinco de Mayo, not really technically a national holiday, but it's a celebration day. Today is actually a national holiday, and anytime there's a national holiday, that's a big deal, rather than just a recognizing celebration day, if you will. And that's because the banks, right? If the banks are closed, that means transactions are not happening from a goods of imports and exports perspective. So central banks and banks are not making transactions from dollar to yen or yen to euro, and when those volumes happen are not happening, you're going to have a low volume in the market, and therefore there's not going to be a lot of movements, even though the forex market is still open, right? So technically, the market is open and the market is moving, except it's not moving as much, right? So you're going to have yen open, Australia, New Zealand open during the Asian session, and then you're going to have pound and euro and London sessions technically open, but the market for the U.S. market for dollars, gold, indices, the stock market, the equities market, right? Indices, stocks, and equities. So that's kind of equities market are not technically open. They are open for some CFD brokers, even though they're not open on the futures brokers at all. So that means there is limited opening, and they will be closing early, like maybe 10, 11 o'clock in the morning. There won't be a market opening at 9:30. So there won't be none of those major openings in terms of pit opening for oil and gold. Okay. So with that being said, I am expecting a light volume day. And since it's a light volume day, it is a perfect day on banks' central holiday to just plan your trades and continue to manage your trade and really get ahead of the week in terms of what is going on, right? So we're getting ready to see what's going on for the week, what has happened last week, so that we can get set up and continue to manage the trades that were currently open, or get ready to enter into new trades and look for possible movements in the market as it's come to the end of June, right? So we got 2 full weeks of June. We got this week and we got next week for 2 weeks of June. And it's going to be important because we're going to get ready to go into the June month. So it's going to be a lot of ranging conditions. There could be some trending condition, but the indices, equities market will always be moving. So that's going to be a good thing. The next major bank holiday after this would be July 4th, and that is the U.S. Independence Day. And that is next month in about 2.5 weeks, and that is on a Tuesday. That is on a Tuesday. So the reason why I set it like that, 4th of July falls on a Tuesday, and since it's falling on a Tuesday, we can expect a mild, typical Monday would be, it'll be moving. It'll be more of a trap day on Monday. But on this Monday, you might as well just go ahead and just take it as a non-eventful trading day on Monday, because anything that happens on Monday is not even worth taking a look on Tuesday, because the market is going to be closed, because it's really a U.S. National Bank Independence Day. So any country's Independence Day is just shutting down, right? Even though the market be open for sports, Canada and everyone else to be, I'm sure there's some type of holiday, maybe, I'm not sure, but I know for sure it's July 4th, Independence Day, and therefore the market is expected to be closed on Tuesday, again, like today, except it's on a Tuesday, therefore you can just kind of couple Monday and Tuesday into the same day. Oh, okay. So July 1st is on a Saturday. So we can expect maybe slow volume on either Friday or Monday for CAD. If July 1st is Independence Day from the French, right? So it's an Independence Day from the French. So I'm assuming either Friday or Monday is going to be observed as a day of, bank holiday. So we can probably expect Monday to be a completely dead day. So we'll continue to Monday. Any Monday anyway is probably a slow day. Yep, I see that, Brad. Thank you. Okay, so let's go over today's calendar. This week's calendar. Right now we got upcoming at 8:30 Canada at PPI. Nothing big. Just from a Monday perspective, as you can see, there's no red folders. There's only an orange folder, and that's going to happen tonight at 9:30 p.m. That'll be an Asian session, and that's just a monetary policy meeting minutes. So whatever report comes out, that just kind of, if it's hawkish or if it's, dovish, right? Hawkish means positive, dovish means negative, right? Make sure you guys know that. So it's going to be either hawkish or dovish comments. I'm going to assume it's going to be more hawkish. I mean, Australia's been doing pretty good in terms of strength, and I would like to see that momentum continue on with, Australia continue along with New Zealand. Okay, moving on to Tuesday, and as you can see, there is no red folder, right? So if there's no red folder, it's just going to be a normal ranging day. But Tuesday is more of the true beginning of the week day, because Monday is more the trap day, it's low volume day. And this is when banks really start to do a lot of the transactions from over the weekend for central bank transactions, exchanges. And we expect a lot of volatility to happen on Tuesday, but there's no red folder to really get into any type of concerns. And then we move on to Wednesday. Now, Wednesday we get a little busy. So Tuesday through Thursday is always busy, especially Wednesday and Thursday is the biggest. But Tuesday, Wednesday, and Thursday, that's when it gets really, really busy. So we got some three folder news. One of the big ones is the CPI for pound. Pound has been doing pretty strong. This is the inflation. And you can see right here, it's 8.7. They're expecting to come in at 8.4. And this is going to move the pound currency at 2 a.m. in the morning, right? Right now, pound has been going crazy. It's been parabolic strong. We'll take a look at that technically. So even though we know technically it's been going pretty strong, that doesn't mean that this will continue to go strong, right? So fundamental news, we don't try to predict the news. We don't try to say, okay, the news is 8.4 and we're going to see 8.3, therefore the pound's going to be weak. Nope. We take a look and said, okay, at 2 a.m. in the morning on Wednesday, expect to see major movement on pound, right? And what we got to do is just kind of look at technical to tell us how it's going to move, and because how we suspect it, or how we, let's say, speculate it to move based on how it did move. So we're going to have to look at a price action perspective. Okay, so after we get into the London session with pound, we're going to get a little bit into CAD. So there'll be some CAD movements on 8:30 on Wednesday, and then we got the 10 a.m., right? Fed Powell testify. This is going to move the market. Let me see here what kind of Fed Powell speaking. He's due to testify at the semi-annual monetary policy meeting before oh, geez, this is going to be major, guys. You guys remember the last time we had a meeting like this happen? This is going to be major, major. Okay, so anytime he sits in front of the Financial Service Committee, oh, it's going to be major. Oh my gosh. So 10 o'clock, he'll sit in front of the White House committee. He's going to be talking. Obviously, it'd be more of just a testimony. They do it twice a year, 2 or 3 times a year, right? So this is semi-annual. He's going to be sitting in front of and this is a kind of usually come in 2 parts, right? So he'll read the statements, and then the committee will hold a question. So this is going to be really, really big, right? Typically, what you don't want to do is, let's put it this way, with indices, I'm not going to be trading indices on Wednesday. So Wednesdays, no, right? There's no indices movement trading. I mean, there's going to be indices movement for sure, but I'm not going to be trading indices for the simple fact that it'd be just be crazy parabolic moves and volatility on Wednesday. So this is one of those days you don't trade, and therefore you don't want to trade into any USD pairs that day as well. Okay, we're going to trade the aftermath on this one. So like one of those days again, we can trade in dollar and gold Monday, Tuesday, but when we get into Wednesday, this is one of those days you want to kind of like stay out because the market's going to manipulate. Anytime red folder like this again, just think of red folder like this. Those news, we're talking CPI, PPI, FOMC minutes, and Fed speeches, right? So anytime you have something like that, that is the most manipulative time to trade those particular pairs to where it is totally unpredictable, meaning anything technically sound, and I don't care what type of trading strategy you use. I don't care if you use a clear, lazy indicator that tells you to buy and sell. I don't care if it bounces off supply and demand. I don't care if you have statistical data. None of it matters. And it sucks, but none of it matters on heavy news day, such as these major moves, because this is basically institutional trading day. This is their day, right? This is when they compete to each other and they move big volume and they move it radically and irrationally and they move it suddenly and they move it either way and there's no way to predict. So we have to allow it to play itself out until they move it into the intended direction. So we have to be very careful by not trying to go in and try to trade our trading rule because it does not apply on these type of days. Okay. So on Thursday, look like it's going to be a Wednesday and Thursday deal. Yep. Normally it comes in 2 days, right? So after Tuesday, Powell is going to also be testifying here on Thursday, and it's going to be in front of the Senate. Okay, so after the House, right? So after he sits in front of the House of Financial Services, he's going to go and testify in front of this, what's kind of silly, right? Then he's going to be sitting in front of the Senate. So we have the House of Representatives, and then we got the Senate. So we got two sides of the government that he's got to go and present. I don't understand this whole political thing. That's just the way it is. I don't know why. Other than, I got my own opinion because the two separate government per se of the committee, but it's neither here nor there, and that's just the way it is. Okay, before that happens on Thursday, we do have a central bank decision. There we go, right there. So I got another sip of coffee here. So we got a central bank not a holiday, central bank rate decision for Swiss francs, and that is going to be at 3:30 a.m. This is not to be anything that we need to stay up and wait for, but this is to say that any Swiss francs, or if you're in a Swiss francs pair, this is one of those days you want to go ahead and protect it, meaning you either want to hedge it, or if you're in profit, you want to go ahead and put your protective stop loss there. But we are expecting to see some Swiss francs move. It's going to be a major Swiss francs move. They are right now at 1.5%. They are expected to go up to 1.75%. And with that being said, I can tell you that this may cause some strength in Swiss francs, and it may not, right? But typically, typically, when you see central banks raise their decision, obviously you expect to see some strength, right? But we're going to take a look technically to see where Swiss francs is at, and we'll see if the strength, makes sense for that currency to go even higher, right, or stronger. So anything with Swiss francs, we're talking about USD Swiss francs. We got, CAD Swiss, pound Swiss, odd, which NCD, Swiss francs, and then we got Swiss francs JPY. Those are probably the most common pairs that we be looking to trade. So we can expect if the pound gets some type of strength, and it could, right? Oh, the other one is Euro Swiss. Some people trade Euro Swiss, which I don't trade. It's a very low volatility movement pair. I don't really trade that pair at all. Let's see. Okay, so we can expect, if there's strength, that we can expect this one to go down, all these to go down. And here's the thing, with Swiss francs JPY, we can expect it to go up. Sure, it's your chef. So everything is expected to go down except for chef JPY. And right now, JPY is coming off a weak monetary policy announcement. So JPY was weak for the last couple of weeks. Today, it looked like it was doing pretty strong today, some recovery. But we can expect this currency to possibly shoot up, and it could go up, or it can go sideways. Let's put it that way, because if JPY and Swiss francs are both strong, they can go sideways too. But I can tell you, Chef JPY, when we take a look, it is at its all-time high, historical high, has ever been in the history of Chef JPY. So if there is strength, then it can go up. And if we are in profit for Chef JPY, then we may want to go ahead and move our stop loss. We'll take a look. We'll take that entry so that when it does come up and it plays around here a little bit before it will come back down, I think it will. I think any positive strength in Chef JPY will be temporary for like a day or two, and then we're going to come back down if JPY strength kick in. And we'll take a look, right? So that is my only concern when it comes to Chef JPY, and that's why I'm spending a little bit of time on Chef JPY. All the other pairs can be some really good setup. If we're not in those trades, or if you're looking to get into those trades, we'll take a look. And this is going to be on Thursday, okay? Okay, so the rest of the news for London will be after the press conference for all Swiss francs. We got pound, and pound is, it's going to be a major day right here. We got Swiss francs at 3:30, and then 7 a.m. Eastern time. Oh my gosh, this is going to be just an eventful Thursday. All right, so we got 4.5 pound, and then we got pound getting ready to make the interest rate change, 0.25, and this is going to move the pound. Oh, geez, this is going to be tough. All right, so this is possibly going to cause, well, typically, right, if the market sees a 0.25 interest rate, this is going to strengthen pound. And if we see positive interest rate, it's typically will strengthen the currency. And like I mentioned earlier, the pound has already been on a parabolic strength, crazy move for the past 2 weeks, and it's probably going to continue on. And then we'll take a look at that. So any pound, so let's put it this way, anything before this day when it comes to Swiss francs, and come to pound, we definitely going to want to protect that position or get out and get ready because it's going to potentially move. So we want to protect the position and get ready for aftermath. We'll be watching it live when this happens. We won't be live in the trade room when this happens because we're starting we start our live at 5 a.m. Eastern time. So we'll catch the aftermath on that one. If you're up, make sure you kind of tune in. For those in London and UK, we'll have a great time to watch the Swiss French currency happen by 5 a.m. so you can make a more close reaction closer to the time after the news release. We'll be live waking up on and seeing this pound. I can say I've seen pounds shoot up and then fade in the same session, okay? Or shoot down and come right back up. I've seen that happen 100 times on pounds and euro, and it does that quite often. So I've seen that quite a few times, and then it moves, right? It goes down. I've seen that 100 times. However, that doesn't mean if this pound strength, it'll keep going, right? It doesn't mean that it can go up, come halfway, 50%, and then boom, keep going if it's strong. So anything can happen, right? Again, it's one of those central banks holidays, not a holiday, central bank's day to where this is the most manipulative decision making when it comes to interest rate. So we just had 3 last week, and we have 2 this week. All right. And then we got the unemployment claims for US 30 would be a good time to trade any dollar pairs. Maybe not. Why? I just talked about it earlier. I just got to remind myself. We got the 10 a.m. Fed Powell speeches, and that's going to move the currency on Wednesday and Thursday. All right. Friday. All right. Now we're going to Friday, and it's going to be London session loaded. Okay. This is London session loaded. Okay. Anything with euro and pound, expect to be major movements. Okay. And then we'll come in at 5 a.m. and we'll try to catch to see what has been moving and it's going to be pulling back or whatnot. And then Friday would be a good day to trade on anything, right? We got 9:45 flash flood moving. So from a summary perspective, this looked to be non-eventful for Monday and Tuesday. Wednesday starts getting heavy. However, we will probably want to stay away from USD pairs and gold and silver or oil. And Thursday is going to be the same day, except we got 2 central bank decisions, Swiss French and pound. Thursday is going to be London session heavily loaded and nothing to be a manipulative or crazy volatile movement like Swiss French and pound will be on Thursday, but we are expecting some flash movements on New York as well. Okay, so heavy. As of right now, in terms of currency strength, it looks like London session pound was weak, and then not the pound. That pound was strong, and then we had the Japanese yen that was weak, and then New Zealand and Australia. Looks like New Zealand and Australia struggled throughout the session through all of New York and not all of New York, all of Asia and London. And it gained some strength, so it probably recovered. We'll take a look at that. But the pound was strong, and then it got weak. And pound is currently about 2.69, and Japanese yen about 7.74. But Japanese did pick up some volume here. They were pretty heavy. So we'll take a look at the index there. So starting off, let's start with the dollars, move to the charts. All right, this is the dollar on the daily chart. as you guys can see, we did have this little shift here. Let me go ahead and clone that one. So that shift happened about right here. That is when we had the FOMC rate decision that was here. So they did do a pause on no interest rate, and therefore that had weakened the currency. So that was last week's movements along with the CPI news. And right now it looks like the Feds, during the press conference stated that, they didn't raise interest rate, but there is possible more interest rate hikes in the future. And we have 4 more rate decisions coming up: July 23rd, September 20th, November 1st, December 13th. And right now it is just suspected at the next meeting on the 26th next month or late next month, there is a high 74% probability chance that we could be seeing a 25 point basis point hike, therefore move to 5.5 interest rate. That will strengthen the currency, okay? And then on September, it looks like there is about a 66% possibility it is going to raise interest rate then if it doesn't raise interest rate here, right? So if it doesn't raise interest rate here, there's a 66% possibility we're going to be raising the interest rate here. But if they do raise interest rate on the 26th next month, then there is a current 11.9% probability it's going to raise interest rate again. So this is kind of low. Again, this is like, geez, July, August, September. It's like 3 months out, right? So this is 3 months out forecast, which is very, very low accuracy, low probability, not even a significant to even consider. So we're just going to focus on July and just say this is more important. And we are seeing a possibility that they are going to raise interest rate, which Jerome Powell, the Fed chairman of the Fed for the U.S. central banks, did indicate they are going to possibly raise interest rate, and a pause at this meeting that they just had last week does not mean that they will not continue to raise interest rate at all. It just means it's going to be a pause, looking at more data, and it did look like he's going to indicate to raise more interest rate in the next meeting. And it's right now it's at a 74% probability. So what does that mean for the dollar? Well, that means that the current weakness we're experiencing right now may be short-lived. I don't know, right? At this point, then when I'm looking at it technically, it looks like we're experiencing this move, this swing. We are creating the same equal low, and it did not take out this high. We are creating a lower high, and this will determine if we're going to see a new lower low, or we could be seeing equal lows again, right? Right now, it is bearish. It is weak. We are far from the strength of the dollar to be any indication at this point until July 26th. However, very, very important, what can move the currency to make it strong? Or what's going to be moving the currency until July 26th, right? What can be moving the currency? Well, other news like CPI, PPI, non-farm payroll, which is unemployment report, and FOMC. Well, we had the FOMC, and we're not going to have it until July 26th. So let's take that out. It's speeches. Is there any type of new or upcoming speeches that is going to move the currency? And it is. We got Tuesday and Wednesday, right? So Tuesday and Wednesday, he's going to be testifying and he will be speaking. So we can be ready to say this is not going to be taken until July 26th before we know which way the currency is going to move, right? We are definitely going to know by, Wednesday and Thursday. Let's put it that way. So Wednesday and Thursday, we are going to know. Clear and simple. He's going to probably share more insights on if they're going to be raising interest rate and what a higher probability or low probability. And we either going to see the break of this or we are going to see the retest of this. Okay. So my suspicion based on what I'm seeing technically, we are coming down to a demand level, right? This is a demand level. So let me put it there. Very clear. And technically, anything that helps hits the demand level, I would expect to see what? Plain and simple. I expect to see a movement going up. And I don't care what currency it is. I don't care if it's an index, that does not matter. What I'm saying, what my chart's telling me from my technical experiences says, we should bounce off of demand levels. And you are better off trying to trade it off a major demand and support level. If it breaks, then that is going to be a major move, right? In other words, if this breaks this demand level, this will be a major move. And therefore, you can best sure that if you do get a break of structure there, this is going to be moving to the next level. So if you hedge there, you can best sure believe you may be keeping that hedge and not having to worry about closing that hedge out. It is definitely going to be here, and you can take profit off your hedge to be able to take the next, bounce back to at least 50%, right, from a major level right here. So I am going to suspect and keep that technically to say, look, we're looking to, this currency is looking to move, and we are expecting some type of strength coming in because of positive, comments that may be coming in. And therefore, I would suspect this currency to hold its ground, right? It will hold its ground until it breaks this level. It breaks this level, and we come here on Wednesday or Thursday. This would be the time to really see what we're going to be seeing. Like if it breaks, we're going to trade the retest on that, and boom, we're going to short it. We're going to short the dollar. That means we're long euro, we're long pound. If we see that break, right? We got to see that break. It didn't break it here, it didn't break it here, it didn't break it here, but that doesn't mean it won't. But if everything holds, the dollar is not done yet. So to me, the dollar is done in terms of facing the bear market when it breaks this. And bear mean I'm shorting and not looking to do nothing else but just short that damn dollar, right? So as of right now, I'm not there yet. I'm not saying that the dollar is done. I think there is going to be some more strength coming in. And I think the dollar is going to be based on the technicals until we break that. I believe we are going to come back up, and I think we are going to exceed this. It is going to be major liquidity that I'm going to need to see it breach, right? That's a major one there. And then, of course, this is a major one right here. We got some sell side liquidity right here that needs to be breached. So right now, until we breach that, I'm saying we're bullish, or I'm looking to be bullish on the dollar. That means I'm looking to short euro dollar, pound dollar, and I'm looking to short gold and indices, right? But this has to be going up. Now, there's a lot of reasons for it to go up. There's not a lot of reasons for it to go down, other than we got some, for value gaps and basically just demand levels waiting. But we have a lot of things to clean up here technically, right? We have a volume imbalance that was just cleared right here. So that volume imbalance was just cleared right there. So I'm gonna move that back. So we got a volume imbalance that was cleared right there. You can see that the dollar is already looking bullish right now. For this day, it closed Friday kind of bullish. And we got this indecisive candle. And right now we look like we have a strong indication that this may be a strong bullish day for today, right? And obviously, but it's a bank holiday, so I don't expect to see a lot of movements for us to get all crazy and to see a lot of volume at this time, as the New York's session typically opens in about another 2 hours. And we're probably just as all we're going to see, right? But this is a strong indication that we may cover this imbalance. We're going to cover this volume imbalance. And I think we're just going to continue on, right? I think it's going to be one of these moves. I think that Tuesday, Wednesday and Thursday move is going to do that. We got a volume imbalance there. Okay. So I need to see the break of this. This is going to be really, really clear. If we dip into this weekly demand level, then it's going to be very indecisive in terms of what is going to be going on. I'm not going to gamble and speculate. I'm going to wait and see more evidence, stick to the rules, wait to see liquidity break, or at least wait to see the retest. As we're seeing right now, this is a retest or a reject. This is more of a reject. This is a very rejection candle here, clear rejection candle. Indecisive rejection, so if you want to call it indecisive, that's fine. But when we have this wick at the peak right here, especially poking down to this volume imbalance, this is a very clear rejection pattern. But that doesn't mean it's just going to go up. I mean, hell, it can just do this. If anything, it can just be a clear pullback to the downside. Clear and simple. I would agree with that. So I wouldn't call it bullish yet until we do break this high right here. This would be a very good clear indication. This high right there, which would be on the 4-hour chart. So you can see where we're creating lower lows, lower highs, lower low, lower high before we dip down. If we see this break of structure here, then I would agree to say that it definitely looking to be a very good sign of change of character once we break this structure. So we will be looking for this. I made that symbol there. I'm gonna go to the 4-hour to show you what that looked like. Let me know if you guys can see this. This is that right here. So that would be that clear break of structure. So you may want to mark your chart. Let me put a label there. So on a dollar, we're looking at about 102.93. That would be the price break of structure that we can say, hey, it breaks this. We don't have to go wait and go up here. It breaks this. We should be looking to go bullish. Okay. The other thing is, if I go to, I'll keep it here. From this swing, you guys can see where the dollar went. And it's in our discount zone. So when it's in our discount zone right here, this is our discount zone. And this is the 50% level. And it went basically almost to the 786. It probably did. I'm just probably not measuring it precisely here, but let's put it to where it's greater than 618. It's much, much closer. It's not even 50%. It's much, much closer to the 786. So in the 786 with the discount level, what do you think I'm thinking? We got to be looking bullish, right? So I'm looking for bullish signs. And if it wasn't for Powell testimonies coming up, I would be looking to go long and or look for a strong indication of rejection to possibly take this shorter and take it down to right here 100%. Right. So this is why this is a level that's very, very important. If it takes out this higher time sell side liquidity, then we could be seeing a weaker dollar for the rest of the year. However, I think there's more strength coming in for the dollar. I think all of this was just more of a cleanup for the market makers. And I think this is going to be just, to be honest with you, a higher low to the uptrend, right? Meaning that way. Okay, so that's what we're looking at for the dollar. Let me go back to the daily. And this is what I mean. I think this is more of just a higher low. For this. And I think that is going to still happen. That's the only thing I can say. We got the 50%. Take a look. I'm gonna put this 50% equilibrium right there. That is my 50% equilibrium. To say I would expect the dollar to come up here at some time in the future, and I do not think it's over yet. I think we're going to come in somewhere in this level. I would not be surprised to see it here, but I'm still thinking that we are going to see the dollar come here within the coming months. So that's bold because it's kind of hard to say that when you're seeing, the high. That was an extreme low, and then you got a lower high, but we got a low. We didn't take out this low, but we did get a lower high. We didn't take out this high either. So, it can keep going. This could be a sign to go down, or this could be a sign that, hey, we're going to see higher prices. And with the indication of upcoming interest rate strength, interest rate hike, I'm looking at it technically and said, oh my God, this may continue to get strong. So I'm still hanging on bullish with this one, especially when we end the discount. Okay. So we're going to be looking for that this week, and we'll watch it unfold in front of our eyes. It hits above this, we will be looking to take this. I think we should be looking to short the dollar in terms of, long the dollar in terms of shorting, all of the dollar crosses in the quote currency pair. Okay, so we'll take a look at that in the forex pairs. Look at a couple more indexes, specifically upcoming Swiss francs, real quick. So we got Swiss francs coming up. So let's take a look. Now, Swiss francs, I'm sorry, this is Canada. There we go. Swiss francs. Ooh, look at that Swiss francs currency. Go to the weekly. Ooh. We got Swiss francs currencies. Bank rate decision coming up. And I can tell you guys by the way it's looked right here, this does not look to be possibly a positive for the Swiss francs currency. In terms of, what the Swiss francs government expecting to look to take it here? If it does go up, this is about as far as it's going to go. I can clearly see that it can come here. Since 2014, that was the high, right? We got 2015, and then we got this high right here of 2011. But this history of the Swiss franc currency has not been that much higher, right? All the way back to dating of 2001 right here. This is pretty extensively high already. You can see that right now. Take a look. Go back. This is the weekly. You can see that, wow, we're already at a high. Look at this swing right here, and then equal swing there. This is I'm gonna say this. I'm looking to see this currency come back down. I'm not gonna lie. I'm gonna be totally honest with you. I see this. It got all the reasons to come back down. There's no imbalances here. This imbalance here. Let me go to that's the weekly. No imbalances here. All this is very clearly balanced. There's well, there is a gap. Oh no, there's no gaps. No gaps, no imbalances. Oof. Yeah, I'm going to be bearish on Swiss francs. I know the currency is going to be strong, but if it goes strong, I don't expect it to go that much stronger. And meaning, if it does go strong, yeah, it could go here, possibly, or by Thursday, it could be down here. And if it gets strong, guess what? It can just come right back here. Right? I don't think Swiss francs is going to go that much higher. I'm expecting eventually over time, it's going to get weaker. So we have to be ready for this, especially when you see in the currency index already bullish and strong since October 22. We're right back, let's say 100% of its fib. Think about it. It's 100% movement of its fib. And if currencies in equilibrium and the efficiency market plays itself, and let me go here. You tell me. Watch this. I would not want to long that. Not here. And that's technically what I see, period. You do not want to long here. Don't want to long anything in this level, right? I'd rather short it. Just like I'd rather buy it here. I'll take my chances. I'll buy it here, and I'd rather sell it here. So yeah, I'm going to be bearish and watch it unfold. And I could be completely wrong, but temporarily, long term, I think I'm going to be very clear. It has all the reason to be bearish. So that's Swiss francs. We'll see it. So if you see a spike, I think it's only going to be just manipulative spike, period. All right, so pound. We got pound central bank decision coming up. You can see how vertical this move was and how it reached to this particular level. Right, this is on the dailies. Go to the 4-hour. So it's at a very key level there. We're seeing some reaction on the pound. Let's go back to the daily. However, that does not mean it can go a little bit higher. Obviously, I do see this. I'm not oblivious to the point where I do see a major supply level there. However, I don't know if it's going to go there. So we have to be prepared for the possibility that it could come here with that strength on Thursday. If it does, okay, so be it. This is where you want to do nothing else but to be short on pound. I'll take my chances. Tell me if you guys are wrong. You guys want to buy here? You guys want to buy a 2 there? That's up to you. Me, I would rather wait and go ready to go nothing but fire, nothing but short. And I want this thing to fall. I want this thing to fall so hard. I want to see the full rubber band effect, especially when you see this move that moves like that. Okay. So it's nothing but pressure on this currency to fall. I can tell you that. Now, measuring the volatility on this, right? This is obviously this is the pound, and the pound dollar is clearly looking like this, right? Because this is the pound moving against the dollar quote. And I can tell you from a efficiency standpoint, let's look down here. If this pair has been rebalanced, you can say it was rebalanced here. That was rebalanced. Okay, let's move that currency here. Was it rebalanced here? Oh yeah. Okay, we can move this balance here. Now we move it here. Was this pair rebalance? It was close. It was close, so I'm not going to say it has. It was nowhere. But if you take it little by little, right? If you take it little by little and take it little by little market, this is what I'm talking about. This is very, very important. Very, very important. So make sure you guys pay attention to this. We are not looking at this point, any of this market, when we first got this swing. Okay. When we looked at this market from this swing, we're looking at it from here. We're looking at it from here to here. Did we get a 50%? Yes. Okay. This swing, it's been balanced, right? So now we can move it up from this swing to this swing. So we move it up because it's in an uptrend. So we're going to move it from here. Let's say we move from here to here. Did we get that rebalance? Yes. Okay. Let's move it from this swing to that swing. Did we get it? Oh, did we get a rebalance? Yes, we did. Okay, so now we can take that factor and go from here. Go to the next swing here. Did we get a rebalance? No, we didn't. So we extend that and we keep that all the way to this level here. Wait, hold on. Hold on. We didn't get that swing here. We didn't get that here. But did we get it right there? And I can say, yeah, it looks pretty balanced there. Yep. So let's not, trying to say, well, technically it's like 1 pip off. No, it's just closer than that by far. So let's call that a swing low balance. And let's move it. We got to move the box. And we got this swing up here. Did we get that rebalance? Oh, no, not whatsoever. Didn't come close enough. All right. So we're going to move it up here. And let's call the rebalance from there. So we didn't get that rebalance point here. Far from. So prices moved up. So now we have this rebalance, which is right here. So this is I'm going to call that this is high probability. This is very high. Extremely high probability. Probability, high probability. Okay, it's very, very important. That means we are going to see this rebalance points, and it's going to happen. Means we're going to see pound take that swing, and this looked like a very good order block for it to come down. However, could it come all the way down here? Absolutely. Oh yeah. Yeah, I believe it. This could come all the way down here. Not, not deep in here, but just like this. That makes sense? I can see that happening. Now, there is some imbalances here that makes it very clear for this currency to come down and rebalance and clean that up. So it's not to say that it's not impossible for it to come out and come down and do an equal low, right? When it does an equal low, it looks like this. Just like right here, right? Equal low, equal high. That's what I'm talking about. You got equal high there when you got 2 points that come together. This is kind of an equal low, a little bit lower low, but just more of an inducement. The equal high here. Kind of an equal low there, right? This is kind of I wouldn't call that an equal high, but that is a swing point. If you go to the lower time frame, that is a swing point, and that does make sense for this to come down. But there is a little movement coming up. If it doesn't come up and take this at the currency bank rate decision, then we could be seeing this by Thursday, and then come up, give us a equal high, right? And then come back down. I can see that happening. But here's the thing. Are we going to see something happen right here that's going to give some relief on the pound? Oh, yeah. Oh, yeah, without a doubt. It's just a matter of how, it's just a matter of when, right? And we got the bank rate decision, so could be definitely after that if we don't see the immediate spike. Just because we know pound is going to be seeing a higher interest rate, that doesn't mean it's going to be better, right? It just should, but we've seen currency do other things, so we can't say something is going to happen for sure because of an interest rate change. But most likely it should, but we could see that short live, and all of a sudden, boom, it rebalance. Now I have this rebalance point here, and all that is just from this particular swing, right? From this particular swing, I see a rebalance point here. So this is a nice order block. So these are very two key order block or demand levels that I'm seeing price going to rebalance. It is coming. Be ready. Expect it. It will be coming to a chart near you. So that is a positive thing. So be excited. And the most important thing here is just look at the angle on this thing. Okay, so we didn't get that, did we get that 50% rebalance here? No, we looked at that, right? So we didn't get that quite rebalance, but we did get a little bit of a snapback, right? But when you see this vertical move here as well, this vertical move right there, I would say I would expect to see an immediate 50% snapback soon, very soon. But there is going to be some type of snapback on this movement. This start off at 90 degrees and then kind of drifted off to like around 70 degree. But it's just to say we are going to see a rebalance points sometime in the future. Absolutely, absolutely, all because of this vertical move and this bullish move that the pound's been moving. So as of right now, I'm looking to short pound, and I would like to see the pound come down to at least right there. Okay, and if it doesn't do it here, I'm okay with waiting until you do it there, and I'll short you again. I will forever hold my peace, and I will hold my ground on my pound to short and weaken pound and see that come down. And that wasn't to be rhyming on purpose. All right, so these are two that I'm looking for it to come. It's looking bearish right now. on the 4 hour. We are seeing a little bit of weak bearishness. I can see it, rebalancing to at least that 50%, and that could come all the way leading up to Thursday, meaning this can come all the way down for the rest of this week until Thursday, and then shoot back up. So if that happens, we gotta protect our entries and be ready to reload. This is what I'm talking about. If the pound drifts here Tuesday, Wednesday, we can see a Thursday pickup, right? This could be a Thursday bank rate with news release, and we could see that little spike come down and then come back up and do a equal rebalance. That could happen. When that happens, we want to go ahead and protect our pound. If we're in positive, get out, cover, cover your profits, come up here or up here and read. Let me put one of our coaching students, I'm gonna be Brad, reload trader right here, and reload this thing right here or right here. And then get ready to take this down. So we're gonna get this rebalance. We're gonna get it. It's just a matter of when, right? Exactly when. Okay, so that's a pound index. Let's look at Swiss francs. Oh, we did look at Swiss francs. Japanese yen. Let's look at Japanese yen. Okay, Japanese yen, what's going on? So on the daily, we are back to this demand level, and I think we're toying around this demand level here. You can see where it is in a little bit of a bear flag, but we are back to this demand level going to the 4 hours. And it's really holding in this particular demand level here. Right, in this particular demand level. If this currency does break out, and I would say it needs to break out of this critical low right here, these liquidity points. It breaks out, we're weak, right? We're weak, and we can see lower yen weakness expected to come. It is weak. This is the Japanese index, so I do see this weak. Will it come all the way down here is yet to be seen. We've already had our Japanese yen index currency bank rate decision last week, which weakened the currency now. It is a little weak now, even though we did get some strength today. But right now it is looking kind of bearish. So we'll need to see on how it does for the next couple of days, right? And we'll continue to take a look on the index. However, I need to see it hold this level. If it holds this particular level, then we could be seeing stronger index on the Japanese yen, right? So what I'm going to do right now is I'm going to bank that the Japanese are going to hold their currency to not get any lower to what they had experienced last year. I don't think they were really happy with the currency drop in this weekend low. Look when it came here, and it looked like they did some type of Japanese intervention. So these were the two Japanese interventions I saw. That one, you guys see it? And I think it was one more. They did like 3 Japanese interventions. So that's when they kind of hit the reset button and caused that to happen. And those were like 1,000 pip moves. Okay. When it got into this level, this is that level I'm talking about. Are we there? And I would say we are. Right. So that is that level that the Japanese did not like. Japan did not like their currency getting that freaking low. So other currencies are and other traders are kind of leery about taking this below this because they know Japanese index, they take it this low, it's gonna bounce. It's gonna be like a big old trampoline. So I am going to suspect that the yen's going to hold their currency, and I'll be looking to see some bullishness coming out of yen this week. But if it does break, and I'm putting this on recording record, if it does break this liquidity low, yes, we will be seeing this possibility, right? And I would be looking to say yen could be weak much further. However, everything is pointing that we may see a recovery if it holds off of this level. That's what I'm looking for. I'm looking for that yen to hold this level. If it breaks, then we're gonna short or wait on more yen. And right now I'm deep in pound yen, and I'm looking for this thing to recover, bounce, and maybe more pound weakness than it is yen strength. But we will see. We will see. So let's get into the other pairs real quick. Let's start with the gold. Okay, so this is the gold market right now. As we can see, it is in this nasty range. Look at this. This is the top. Look at it's a swing high, swing low, swing high, and it's struggling right now. It's struggling going up and down in this nice daily range. And we've been scalping up and down, we've been getting some good pip, but it's hasn't really been moving, right? It hasn't shot up, even with the dollar being that much weaker, right? We didn't see this gold take off and break this level to historical highs. So when I don't see that equal movement with the gold, well, this tells me that this is still a possibility in play, right? And I will still hold this and say we're looking at gold to be weaker, okay? We're seeing that gold is leaning down, creating new lower highs. Okay, we're seeing gold create new lower highs, or not new lower highs, new lower lows. So I'm suspecting this to be happening with the Fed power speech. I'm looking to drop gold all the way down to this level here. And this would be the rebalance point, the equilibrium point here for gold. Gold really didn't rebalance here. But when you see this when I take this swing low, so this swing, it really didn't get to that 50% level. So with that being said, I'll bring it up here. Now we got a nice 50% level right there. So a lot of fair value gaps. Look at nice order block here. You can't possibly tell me that we can't see possibly gold come down to this level and take this particular location. And then we can see a bull market after the dollar becomes a bear market. So technically, I'm looking at the charts here and I'm seeing if gold does not bounce off it here and breaks out of this range, right? This is just one nasty range that we see in gold is in right now. That's a range. That means it's trading within equal highs, equal lows, right? And equal highs right here, equal lows, and it's not breaking either way. If we get that power speech and it's bullish on the dollar, oh, gold, it is going to tank. And we got a big old fair value gap imbalance or fair value gap right there. It's a lot of clarity needs to be cleaned up there. We got some down here as well. So could we even see lower prices? I would say this is high probability. This to me is very low probability, very low. I mean, we would have to be, damn, dollar just have to be that much stronger So could Fed Powell speech take it this low, and central bank rate decision, FOMC, July 26th, take it this lower? Wow. Yeah, that is possible. But as of right now, I'm just going to stick to this one right now. So I'm looking at short gold, and that is with the dollar being strength. I'm looking at it technically. I'm not trying to, based on what I feel. If we see a break of this is going down, and everything's leaning towards down. I don't see, I don't see the gold going up yet. So there's nothing telling me that we're more bullish. Now, if this was flipped, and I was seeing, you know, seeing this, then oh yeah, we're definitely going to be bullish. But I'm not seeing that. Not seeing that whatsoever. I'm seeing more of this, to be honest with you. So and then with the gold coming off a swing high and not having an imbalance with the upcoming speeches and possible FOMC rate decision, this is all objective. I'm looking at weaker gold. So I'm better on gold. Okay, let's stick with one S&P 500 index. Okay, S&P 500 index. Ooh, what is going on here? Okay, so let's take away this, because this is that equal high, critical high that I call. This was a major supply zone that has been breached. We did take that higher, and we did come to a critical level up here. That is a weekly demand supply. And if we're in a weekly supply, what do? What's our rule? We short it. We look to short. Yeah. And I would look to see a rebalance. We did not go as high as I thought it would. So I can take that off. And we came right to, look at this. You can't tell me that's just price action, just the way it is. Look at this beautiful price action. The way it just come into this order block and just slightly just mitigate it, just come in with a couple of candlesticks and said, okay. And then it moves away, right? And looking bearish. So with that being said, I think I just gave away my bias. I am looking for this to be bearish. Equities market, I want to see that rebound. Look at the angle on this thing, right? So let me go ahead and get rid of these trend lines to not confuse us any further. And let me just move this over and do that. Now let's look at the rebalance point. Did the market rebalance itself? Let's see. From this swing, yes, it did. So we can get away from that. Did it rebalance from here? Yep, it did. Move that from that swing now. Did it rebalance itself from up here? Oh, yeah. Yes, it did. Way in here. Okay, so let's take this swing. We're going to move it from here to here. Did it rebalance itself here? Oh, no. Okay, then we just extend it. Yeah. Okay, so now we have a rebalance point that goes about right there. You see it where it says 0.5? Yep, that 0.5 from this swing to this swing. Guess what? It's coming. And we're possibly looking at lower S&P 500. And if you look at it, that kind of makes sense with this move right here. Yeah, this. Tell me if you guys see it or not. Am I being, over analytical here? Are you guys not seeing this with me? I think you guys can see it. It's pretty clear when we start to see the pattern with our own eyes and said, hey, this is looking to, it's rebalancing itself efficiently, but it's rebalancing itself efficiently bullish, right? So yeah, the market is definitely being bullish, but it's in this balance, and this is a higher time frame. So if we look at the weekly. You guys can see it now. Are we going to see this? Absolutely, we're going to see this. But we're going to be doing this. We got to rebalance the stuff. And this is a big move that needs to be released, rebalanced, right? If it goes here, it's got to rebalance itself. And we got to be ready for that, right? The market will rebalance itself just like the market rebalanced itself on this bullish move, right? This is when it was like going from October 2020 all the way to, we had like a 2-year move here. This is what I'm talking about. When it moved from here to here, it never, see that came pretty close, nowhere close. So it never balanced itself. It never got a rebalance here. Never got a rebalance there. It never got a rebalance there. And I got to tell you, when people were looking at this bull market on the S&P 500, and when they got here, people were thinking, oh my God, this market is going parabolic. You guys remember that? This was like, oh my gosh. And then this is when market where people were calling it a crash. A crash is coming. They're like, get the hell out of here. Who are you? Yes, it's going to crash. It's going to rebalance itself. The market's got to be efficient. No, it's not. Let's take it back up, right? And we're talking from October 20th, 2020, October 26th, 2020. And I would agree with you that, for 2020, this, you can't tell me it's going to fall. If I would just look at this and not know anything better, but me saying, hey, I know it's going to rebalance. This is 50% here. And then the market goes even higher. And I'm like, oh my gosh, right here. This is now 2022, right? So you're looking at this and going, uh-oh, this is 2 years of a bull run. And this was the rebalance right here. That was COVID. That was COVID. That when it got rebalanced here. But we haven't had this move. This was a 2-year bull run. 2-year bull run. And you're trying to tell me, let me ask you, this thing is going to come back? Are you serious? I mean, what are you smoking? Right? You're looking at this thing and go, what is this guy smoking? You're telling me this thing's going to come back. Oh, yes, it is. It's going to crash. Like all the analysts were saying, this is going to crash. This is going to come down. This is the 2020. You got to understand the market's efficient. It's just going to come down. It's going to eventually have its bear market. It's like everything's going great. Trump is in office. Everything's going great. There's no Russia-Ukraine issue. Everything's good. So what are we talking about? I'm telling you, it's going to crash. It's going to crash. This is 50%. You're trying to say the market's going to come way down here sometime in the future. Is that what you're saying? Yeah. And that's what all the analysts say. And guess what? Were they right? Boop. Oh, yeah. They were dead on. They were dead on, right? So the market had this swing low. And let's see this. Now let's take it from top down. And let's ask ourselves, did the market rebalance itself again? Hello? And we are now considered in what? Discount or premium. Above the 50% is our premium. This is when we should be looking to short. Are we looking to short this damn thing? I am. Right? And I'm looking to short it right here because I am now, because this is rebalanced, I can now flip it and go from here. Well, all this is rebalanced, so I'm taking it little by little and I'm taking to this rebalance right here. So I'm looking for the market to rebalance itself because it balanced itself here. It balanced itself there. I'm looking for it to rebalance right here. Right? Because the market rebalanced itself as it went. It went all the way here. It rebalanced itself from here to here. So that's what I'm talking about. It went from here. It rebalanced itself there. The market, look, it came down, rebalanced itself there. And then from here to here, the market totally rebalanced itself. So folks, we got to rebalance here. We got to rebalance here. You don't think we're going to rebalance here? You know what I mean? I think it's quite simple. Did it rebalance itself? Yes, it did. Did it rebalance itself? Yes, it did. Did it rebalance here? No, it didn't. So have we got a rebalance in this fractal yet? No, we have not. Is it coming? Absolutely. Be ready for it, right? That's what it's saying. And I think it's going to be, it's not going to be 2 years. It's going to come very, very soon. So we got to be ready for that. And I think with the whole volatility and interest rates activity that's still going on, we're not in that no interest rate location here. This was all no interest rate, just printing money, 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 75 basis points, 75 basis points, 75 basis points, 75 basis points, right? So we have 4 75 basis point interest rate and just boom, right? And it just crashed this market, even with the interest rate change. So when the market finally got that interest rate and the change of office, of course, got the 75 basis point, it did kind of shoot up a little bit, but then we started getting weakness in the currency. And this is when everyone was saying, oh my God, dollar's just going through the roof. And in equities market is just going through the roof. Well, we're not going to get that rebalance because it's looking like it's going through the roof here. But look at the angle. Look at the angle. So get ready for it. All right. Oil. This is where oil is at right now. It's having a hard time breaking that psychological $64. Everyone sees it. 64. It's right here. $64 over to your right. Would you say that's a pretty good psychological level? Having a hard time break it there. Ever since we created the supply there, the demand level, having a hard time breaking that $64. We didn't break it there. We didn't break it there, and we didn't come close. So that psychological $64 level is going to pretty much hold. And this $74 seems to be a pretty good psychological level, and $82. Let me know if you guys agree. This is $82 right here. This is the $74. This is the $64. Right? So we are not going to go lower until we do what? Until we break this $64. Right? We get that we get the break of that $64, then we're going to the $60 right here. And we break that, and then we go to this 54, 52-ish, $53 level, which I don't see anything like that happening right now. Not right now. Okay. So if I break that down, you guys see it. Now you're like, oh my gosh, we're going to be playing within this level. These 3 levels is what we are going to be playing with. Yes, I agree with that. We're going to be playing with this $84 level right here. $74 level, and this $64 level. Okay, so let's follow this price action. We came down here already, came swing highs, swing low. We've already touched this a little bit. We created a little bit of demand. So guess what we're going? Yeah, we're going to pass this little $74 level since we've been kind of in this right here, or we may bounce in between these levels until we get up here and play with this level. Okay, you guys can see that because we did that right here, right? Did we not bounce between 74 and 84? You guys don't see that, right? November 2022 to March. November, December, January, February, March, right here. For 4 months. That's what we did. Here, 4 months. Okay. Then we broke it in March. And then we had a nice, just massive parabolic swing. Boom, boom, right? Just real quick, just to kind of throw people off a little bit. And then we came right back swing. So we're going to let that one, we're going to avoid that anomaly. We're not even going to say that's anything normal. We'll just break it down like that. Okay, and now we're in this range here. You guys see it? You see how I'm breaking it down? I hope this is helping, making sense on how we're reading this price action. And now we're toying between 74 and 64. Are we going to see greater than 74 to 84? And I would think we will, right? OPEC is going to lower production and we're going to see higher prices, right? So with that being said, I think I'm more bullish and I'm looking for the break of this. And if I see a rejection, and I'll short it down here. And if I see a rejection, I'm going to short it up here until we get that break. And then we'll come up in this range for a little bit, and then come back in this range for a little bit, come back up in this range for a little bit until we get lower prices. I don't think we're going to come way up here. I think when the Russia-Ukraine situation finally, gets out of, resolution, then we'll probably see lower prices, right? But in the meantime, I think we are going to break this nice little trend. I think we are going to break this, and I'll be looking to see oil. I want to see that break, and I want to see it come anytime now, right? So it can do it now. It can do it in the future, here, but I'm going to be looking at our technical, looking at our artificial intelligence to tell me if it's going to get higher highs or are we going to see a rebound and lower lows, right? And I'm going to trade it either way. So I'm looking to be bullish on oil or play within this range. Okay. All right, your dollar. Here we are. What do you think? I think we are going to go down. It's inverse correlated to, yeah, I think we're going to come down. This was euro strength and dollar weakness, and guess what? We didn't take out the high. Nope, didn't take out the high. So guess what? I think we're going to come down here. This is a rebalance points here. Let's take a rebalance check. Let's do a rebalance check. Did the market rebalance here? Yes, it did. Okay, let's move this from here to here. Did a market rebalance? Nope. Nope. Oh no. Nope. All right. So from here to here, because it got rebalanced here, so it's efficient here. So let's move this to right there. How ironic. What? There's a demand level, like right at the equilibrium. Really? Yeah. That looks a pretty good level to go. right? So I am expecting the euro dollar to come down to the 105, and possibly 104. And then we go higher. All right. Right. After we mitigate somewhere around here, we go higher. Okay. So that's where I'm taking right now. I'm looking for euro dollar to make its way down, mitigate this little, and I'm expecting euro to go weak. Pound. All right, pound. I think that was fun. I think it made a little move. It does have a little move to go. I would agree with that. Go to the 4 hour. It did clear out this liquidity. It looking bullish. However, it does look like it does have a little bit more room. I would agree with that. There is a slightly imbalance there. So higher prices is possible. And it could just do that, to be honest with you. It doesn't have to go high. It can come back up here eventually. Don't get me wrong. Let's look at rebalance points here. 50% snapback. We got that. Boom. Okay. Let's move that up here. Rebalance. Oh, yeah. Let's move that. Get a rebalance here. No, get a rebalance here, here. It's just like the pound index. And it did kind of rebalance here. Okay, so we'll move that out. We'll take that swing. And did it rebalance here? Nope. And nope. Okay, then therefore we're looking for an equilibrium rebalance around this level or lower, right? And I will call pound to come back down to this level, and it could come down as low as here, but let's take this right now to 1.23, and that's what I'm looking to see pound dollar eventually come. If it goes higher, be ready to do nothing else but short. I am not doing nothing else but looking to short. We are in very deep premium territory. Okay, so I'm bearish on pound dollar. On dollar, dollars had a very nice experience in strength. I think that's great. That was nice of you. All right, so I think this is about as far as you're going to go for now. I think this is great. I hope you enjoyed the very strength and taking advantage of the dollar weakness, which is awesome. However, I think it's going to come back down now. So let's look at this. So we've had a very clear balance there. We did not get any imbalance there, and rebalance, no rebalance there. How about when it came up here? Did it get it rebalanced here? No way. It really didn't come down 50%, did it? It sure did. You guys see that? It sure did. So we are back the other way. So we're going this way. Did we get rebalanced? Let me see. Did it get rebalanced here? Yes, it did. So let's move this down here. Did it get rebalanced here? Yes, it did. Okay, so we'll take that off then. Now we're down here. You see how I'm flipping the fib tool? You guys know my move. Yep, what I'm looking at. So it's going to come here or possibly down here. Either way, right? So it's going to do that before I see it go back up again, right? So we're going to see odd dollar come down a little bit, and then we'll come back up. But I don't think this is going to be more odd weakness. It's going to be more about the dollar's strength than it is about the odd weakness. So we could see some odd weakness coming in. So odd in pound, odd in NCD, euro odd, things like that. I think the odd is going to be a little weak. However, it's not going to be as weak as the euro and odd pound will, if I were to compare the two. But and I think I'm more biased there, but I have no clue. But I like to see the dollar strength come in and really take this out. Okay. So I think this is going to come back and rebalance itself. I think it had a nice little bull run. And to be quite honest with you, you're too vertical. You're well in the 90 and 70 degree level. This is too spiking, right? Just way too spiky. It's like this. It looks like this, right? And however, what's funny is that you have to rebalance itself. It didn't fully do a 100%. It actually went a little bit higher. So could this happen? Yeah, absolutely it could. Absolutely, because you can't say it, oh yeah, just because it's 190 degree here, it need to go rebalance right away. No, I won't say it needs to. If you take this move right here, this move right here from here, let's say this vertical move right here. That was immediate rebalance. How about this one right here? This vertical move way up here. I want you to take a look. We're not going to go from swing. We're just going to go from immediate spike down. You can't tell me that immediate spike from here to here did not rebalance itself. That was immediate, wasn't it? Okay. So, and then we didn't see anything that besides these two that rebalance, but we didn't see an immediate spike like that, right? So we just saw a gradual move, right? That was one spike, but that was just one. But it got, obviously rebalanced eventually. So this move here, all collectively, yeah, that's going to get rebalanced, just like it was here, just nice move. But this is more sharper. This is more sharper in terms of a move up. This is more like, let's put it this way. This is more like this. And look what it did. Boom, it literally recovered itself, right? Well, obviously this was in a downtrend, so let's call it this way. This is a nice short move from here to here. Look at this short move. Did it rebalance itself quick? Did it snap back? Oh yeah. Now let's see the gradual move here. Did it come back 50%? Yeah, oh yeah. Come on, you can break this 50% rebalance over and over again, and it's coming. Okay, so that's the thing. Anytime you see something go straight up vertically at a 90 degree, you're going to expect to see it's like a rubber band. Anytime you stretch a rubber band, stretch it, guess what? It's going to snap back, right? So that's that 50% snapback, what we're talking about. And this is the fib tool that kind of help us determine where that 50% is from the top down. So we can expect a snapback, and the snapback happen, that stretch happen anytime you get that spike that's 90 degrees to about 7 degrees right there. And that's not probably perfect, but let's say it's about 70 degrees, right? This is 45 degrees right here. I know I'm kind of going geometrically on you guys, but if I remember the geometrical math, but I think you guys get the drift of what I'm saying. This is all that matters, right? Anytime you see close to vertical, expect to see something at 50% sometime in the future or near future. Okay. All right, guys. Move on. NCD. You see this right here? That's not colored. That's white. Meaning, yeah, I'm expecting that to happen, but it looked like it happened a little bit earlier. That's fine. What I think is going to happen. I have this. I didn't pre-draw this. This is the same from last week. And you guys can see this. Right? You guys can see how the movements happen. So I'm going to go ahead and recolor that now. And I think it's coming, right? So this, where's that rebalance point? Why am I calling that a rebalance? That's not it. Oh, that's not it. Oh, that's not it. Okay. Oh, this is the rebalance point where we hit it right here. So that was kind of rebalanced there. So we are revisiting this. I think we're going to revisit this level here. We may not come down low. I think we may come down low. Okay, so I'm looking for a New Zealand dollar to come back down for about right there. USD CAD, what are you doing? All right, you broke out of that range for the trend channel. Oops. I think this is my box, right? No, no, that came with the indicator. Oh, okay. I thought I'd do that. That looked pretty clean, to be honest with you. I was like, man, that gotta be my box, but I guess not. Let me go ahead and draw this out, take this trend line out. It obviously broke below that trend line here. Okay. And we are some reason at that level. We go down to the 4-hour time frame to see why. And that's a reason why. You see, when you go to the daily and you're looking and you're going, okay, hold on. Why did price just like stop right there? Demand levels right here on a higher time frame. This doesn't even make any sense why price just stopped in the middle, just like in midair. It has to have reached some type of order flow. There's a reason why it stopped here. There's a reason why it stopped here and here. There's reasons, right? We just got to find out why. So if we got to go down to a lower time frame, let's go to the 4-hour time frame, and we look to our left, and let's see if we see any origin of situations here. Oh, okay, yeah, we had a spike, and then we had a pause, like we had a rally, and then we had a pause, and then another rally, right? So that pause, right, created an order imbalance, right? So it came up, grabbed some liquidity, and rebalanced itself here. It balanced, and then boom, it took off, and it created institutional order flow, and then we have to make the value gaps here that would make little mitigated. Well, that creates an order flow of demand. So you got demand here and demand here, right? You see how it shot up and then pulled back, and then it kind of balanced itself here. Then it shook off again with institutional. This is the size of candle, or it creates that demand on a lower time frame. So did it come back and mitigate from here? Nope, 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 nope. Ooh, that's it there. All right, we're here. So what happens now? Well, we got some fair value gaps here. We got some imbalances. So this here, well, looks like we got some rebalancing to do. Well, why? Well, look at the angle of this darn thing. Oh, that's right. Okay, let's go to the daily and let's take a look closer. All righty. All of this is balanced, right? This move was rebalanced, this move was rebalanced, this move was rebalanced, rebalance. Okay, well, let's look at it rebalance from here to here. Okay, so we can possibly see at least it's coming. Okay, so we're going to put it equilibrium there, but I think this is probably more appropriate because we don't see any order block here. Let's go to the 4-hour level just to make sure. Oh, how ironic. We got a supply level there, but we got an imbalance here. So very high probability, high probability. So in other words, we're looking at price to see come up here, and most likely it would come up here. Okay. So very high probability. We got them imbalances that need to be mitigated. You guys understand from the training, right? Price mitigates and rebalances. So I like to see a little bit of CAD weakness for the dollar, but I think it's going to be more about dollar strength than it is more about CAD weakness in this regard. Okay, so I don't think we're done with this range. I don't think so. Let's look to the weekly, and this is what I'm talking about. Go back to the daily. This is the range I'm talking about. I don't think we're done with this particular range here. That range right there. I don't think we're done out of that range. Go to the weekly. Are we going to see lower prices eventually in the future over here? Yes, we are. We will. We'll see it down here. It's got to rebalance. Just think about it from here. Oh, we did rebalance right here, 50%, 50, right here, 50%, 50%. But we're still in the premium, right? So this is just short. So this is on a weekly. We are going to see lower prices. It's going to come down here eventually, but it's going to be when the dollar crashes, when the dollar goes into the bear market. So from here to here, let's go from here to here. Are we going to rebalance from here to here? The answer is yes. We have not seen that yet. So I am eventually looking for prices to come down here, but I don't think that's going to happen anytime soon. I thought it was going to happen right here, but it looks like the dollar is not done yet. It's like dollar saying, hey, don't call me out yet. So that means this box, yeah, it's still valid. All right. We've been in this crazy range. I don't think we're out there yet, but when we finally break out of this box, I think that's going to be when the dollar is done and there's no more interest rate, which is going to be the later half of the year, 2023. I think we're going to see that. Okay. Until then, we are not done with this box yet. And I think we are going to be seeing dollar CAD come back up a little bit more. Okay. I don't think it's done. So I don't think if the Fed Powell's, is better and it's dovish and weak, yeah, we're going to come down. I don't see it, working out of this right now, right? Not yet. Okay. So I am bullish on dollar CAD. Anybody want to take a stab on this one? How about this? What if I do this? Dollar strength coming up. What do you think will happen? Yeah. Are we at a nice demand level? Yep. I think we are. They got some room to go. So I don't think the dollar weakness wasn't that strong enough to take out this low. It just came down right here. That's all. So we got Swiss franc weakness. Wait, for this to happen, Swiss franc had to be weak as well, right? So could we be looking at a Swiss franc weakness, even though Swiss francs could be raising this interest rate? It's coming. So A lot of imbalances here. We haven't taken at this high. We need to see this high break. And I think we're going to see this rebalance. Had price rebalance from here, though? Let's take a look. No, it did not. And that was a clear drop. That was a nice snap, but it didn't snap back 50%. Well, let me see. Did it snap back at least 50% from that move? Yeah, pretty close. From this just drop right here, just enough to snap. Yeah, barely. I would say, yeah, it's pretty clear. Okay, so from this swing though, did it? No. How about from here? Nope. How about this one? Nope. Didn't clear it yet. Okay, well, let's extend it. All right. So we're waiting for this rebalance. So let's mark it. I'm looking from this 50%. Anyone see something kind of significant about that? I see something right there. Looked like there was some price action reaction there. Da-da-da. This kind of came close, so that looks like a very good target for me. I would want to buy. In other words, you push that buy right there, go on vacation, come back 6 months, go ahead and cash out. Wouldn't that be nice? Just put a buy right here, go to Dubai, go to Maldives, come back, and then close it. I'll go visit Brad in Canada, and summertime's coming, warmer weather, right? No more snow, right, Brad? We're good? It's going to be nice up there. So I see dollar Swiss francs coming back up here, right? So I'm bullish. He said for now, yeah, we're going to the summer months, so hopefully we should start to see nice warmer weather, good weather. All right, dollar JPY, what are we thinking? Well, I'm looking to see a little bit of equilibrium, and yeah, I'm still going to be holding up here. This right here, this is going to be different than any other pair from a JPY perspective, for the simple fact that, the dollar has been weak, right? The dollar has been weak for the last 2 weeks, and look what it did. That was a dollar weakness. Did that look like a dollar weakness to me? No. US dollar obviously pushed this one up. So what was this about? This is more JPY weakness than it is about the dollar strength. Oh, okay. So why are you saying it's going to go higher if the dollar is going to be stronger? Well, that's why. This is going to be more about the dollar strength than it is about JPY weakness. So it's a little bit different, right? So yeah, JPY is going to be probably strong, but I think the dollar is going to be just stronger. And this is a very clear rebalance point right there. That swing, we never got the rebalance. Did we get the rebalance from this immediate drop? Yes, I would agree with that. We got that immediate snapback right there. Boom, we got that. I'm not talking about that snapback. I'm talking about that full swing. Did we rebalance? No. How about from this swing? Nope. How about from that swing? Nope. That swing? Oh, by far. Okay, how about this swing? Ooh, nope. Okay. Then that means we got to extend it. Okay. So that means our equilibrium. Look. Oh, magically it did. It's not nice. Okay, so that means we should be coming back down now, right? Well, yeah, we will. But it looks like we got some more business to do, right? So we got the 618. It's almost there. What's the next one? 786. Oh, so okay. I see what you're saying. So we're looking anywhere between this level to this level to say, hey, then let's short it. Yes. And we got a nice premium imbalance that just got to get cleaned up. And guess what? It will. It's going to get cleaned up and it's going to look really, really good. Because I can tell you, not everybody was looking at it like that. I was. And I'm talking about when it was like right here. You can't tell me you were looking at it the same way as I was, unless you were trading with me for a while to say, there's no way that this dollar is gone. I mean, come on, UJ is gone. No, it's going to come back up here. And we got a huge imbalance. So it could come up here too, but I know it's going to come back at least right there. Oh, I was right. It didn't come out like exactly how I wanted it. They did that, and I was like, "Oh my gosh, are you serious?" Oh, yeah, and we are. Okay, finally. But it had to do that, but it finally did do it. That's the point. So I do expect to see a little bit more bullishness on UJ come up here, somewhere in here, and then guess what? With the dollar weakness, no more interest rate change. Guess what? Oh yeah, I'm going to be doing nothing else but shorting the dollar all the way down. UJ short. Okay. So UJ, I'm a little bit more bullish. Okay, now EJ. No, I do not expect EJ to go that much higher. Yep, that was rebalance. Yep, that was rebalance. Nope. Yeah. All right. How about this? Nope. Yeah. Okay. How about this? Yep. All right. How about here? Yeah. Okay. How about here? Yep. Yep. And we came all the way down here, so we got this move and came up here. Did it rebalance? Yep. Okay, so we just moved this over. Came up here, create same low, so we keep that. Came right here. Did it rebalance? Yeah, that came to it pretty close. So let's keep that swing. All right. Did it rebalance here? Yep. All right, let's go here. Did it rebalance here? Yeah. Okay. How about this? No. All right, so let's create that. Okay, so the reason why I'm doing it this way, I want to see immediate rebalance. Where is the immediate snapback? Okay. From an overall daily perspective, I'm looking for this minimum, right? Now, from a, let's say, weekly, now I'm looking at it from a weekly perspective. That was the daily. Now I'll go back to the weekly chart and look for a rebalance. Yep, that was. Yep. Yep. Same difference. So I agree with that. So everything's looking good. Now go to the monthly. So we got an equilibrium that's way up here. So I take my rebalance tool here with that rebalance. Nope. How about from here to here? Yep, that was. Okay. How about from here to here? Nope. From here to here? Yep. And the answer is on this one. Yep. So looking good. So that is definitely, well, we got a rebalance point that's right here. Yeah, 50%. That was rebalance here. So we got another rebalance right there. Okay. Another rebalance point that's like right there. Now, if you take this whole move from this swing all the way up, now we have a nice big equilibrium move right here. This is on the monthly chart. So let's go back to the daily. So let's give us like 3 targets. That we're looking to see price rebalance. It's immediate, second one, third one here. So I'm bearish on UJ. And if UJ goes a little bit higher, which you go to the weekly, as silly as it may sound, yeah, it can come up here to 2008 high levels, which it's already reached right now. This is kind of an all-time high for the dollar since 02. I mean, you're a JPY, and it's been on a very strong bullish move, but I don't think the euro is going to be that much stronger. And I'm expecting to see a rebalance at this particular level on the daily. You can see it's at a very strong demand level, supply level. And I would expect to see a that mitigate it and come down. Got a lot of imbalance. Look at all this imbalance. You got to see that. I want to see that come back down. Okay, so that's UJ. Let's go to pound J. Yep, I am bearish on this one. And it's looking kind of bearish now. However, I do know that, of course, we got, pound bank news coming up. I got it. But just, my gosh, it's just, look at this move on how it's just been moving up. Right. So let's look at the balance points, right? It's been rebalancing throughout. So it's not like you can't recover, right? This right here, this from this move here, did not rebalance. So this is very, very important. Just look at this. This right here, from this swing to that swing, rebalance itself. So now you can go up here. From this swing to that swing, that rebalance. From this swing Up, it rebalanced. So now we can move it here. It rebalance, right? It rebalance. Okay, that's great. Now we're going to take it from that swing right there, that swing low right here. And let's see how far it goes before it rebalance. Nothing. Nope. Nope. There we go. Keep going. Oop. Nope. Nope. Ah, you guys see it right there? Yep. So when you see this and they're going, oh my, and you're seeing all of this, you're thinking, no way in hell. I mean, think about it. We got a rebalance point that's literally right here. It's literally got to come that right there. I don't care if it come back with a wick. I don't care if it come back with one candlestick. It's got to come back. Come on, 50%. It's got to come back at any time now. Hello, hello. Did we get it? Yep, right there. All right. So this is the rebalance point. Let's take it from this swing. There's a swing right here. Did we get a rebalance? Anyone? Yep. Sure enough, 50% right here. Look at going all the way down. All right, so we got to make that a swing. And it came up to this high. Did it get rebalanced? Yes or no? Yes. All right. This is our new low. And let's see if we get it rebalanced anytime from here to there. Nope, not quite. Ooh, no. Let's zoom in a little bit. Ooh, this came close, but not close enough to say, hey, that was clear, right? Yep. We're like real close, but here's our 50%. Came close, but it's not close enough. I mean, close like from this swing low. That's clear. That's 50%. That's clear. So this is our new low. Or lower than that right there. Okay. And we did not, from that high, did not get a rebalance. Okay. How about that swing high? Nope. How about that one? Nope. All right. We keep going. How about this swing high before it goes higher? Nope. Okay. There we are. That's where we are right now. And you want to know what it imbalance is at? Anybody want to take a look? It's right there. But I want you to take a look to the left. You notice anything? For some reason, we've been here before and reverse. Yeah. We've been here before and reverse. Let's look. See that? Been here before, broke through. Been here before, broke through, bounce, 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 bounce. Wow. Look like a pretty good level to say, pound JPY, come back to me. Yeah, I would agree with that. So pound JPY, I don't care if you go up here. Come up here, that's fine. I'll short you again. And all you're going to do is just do this for me. That's all you're doing. If you don't rebalance, you're at least here, that's fine. Keep going. And that's by far as I see you going. And for the weekly, this is 2015. And then right here, this is the 2008 level. I don't see, pound JPY going up that anytime soon. Not, Japanese yen would have a fit. right? Especially when we have the vertical move, we got to rebalance first. We can go higher, but let's rebalance first. But I doubt if we even go higher. But let's say pound gets up here, then all you're doing is just raise the equilibrium that much more, just a little bit higher, right? It's not that far up. I can see it going up, but as of right now, this is where I'm seeing it. And that's where I would like to see it. So pound JPY, I'm bearish. And I'm looking to see pound JPY come down anytime soon to the equilibrium place. And this would be my ultimate target down here. Okay, pound JPY, I'm bearish. I'm looking to see more pound weakness coming in. Okay, CAD JPY. I'm bearish on CAD JPY. Look at that, right into our order block. And I'm looking to see this rebalance. Nope. Nope. All right. Nope. All right. Oh, 50% right here. Anybody notice anything to the left? Ding, ding, ding. Whoa, we have some price reaction. Oh, look at all this price reactions we've had over here. Makes sense? Yeah, I would agree with that. All right, well, at least coming down there. And then I think it's going to come down even lower. So CAD JPY look like a very good place. Oh, balance, imbalance, gone. Yep. Nice move. Thank you. And see the JPY. Oops. Okay, try that again. All right. Yeah, I don't know if I want to do any buying up here. I think I take my chances shorting it. So coming back down, I got an equilibrium right there. Nope. 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 Wow, this thing hasn't rebalanced at all. Look at right there. Nope. 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 So this has a long way to go. Long way to go. Look at that's 50%. Yeah. Come on down. And Chef JPY. Oh, you guys already know where I'm at with this one. All-time high. We're at the top of that. We are now at an all-time price. It's even exceeded the all-time 1979 high. Okay. The rebalance on this one, it's been clear on that one. Here had not. And the 50% is right here. Sound like a pretty good first level here. All right, we always know price move up and down, up and down. And then from there, I think it's going to do this. And I got an all-time 50% equilibrium from here to here. Ooh, look at that. I wonder why. Hope that makes sense. Hope that was helpful so that we can see that what structure is coming. We have no future reference points up here. None whatsoever. I mean, we can go to the oldest data with the oldest price data here. Let's go to a broker ICE that has the oldest data I can find. Go all the way down to the monthly. I mean, all the way up to the monthly. And this is the history of CFTC all the way back to 1972, 71, 72. And look where we're at. Anybody want to buy with me? Like what? No, I don't think anybody wants to buy up here. I would agree with you. We're not buying. This is nothing but high probability shorts. What are you looking at? All right. This is an edge setup. Okay, so yeah. Leonard, what are you doing with search API? I'm shorting. When? Like right now. I'm shorting it now. What if it goes up? Where? All right. Anything up here? I'm just shorting. And I'm going to be looking at it from an AI perspective and take the ADR and look at levels and look like round level. I got 161, 162, 163, 164, 165, and just look at round level from there. So ADR combination of that, and I don't think we're going to see that much more vertical move. I mean, how much more you want to see besides this, right? I think this is pretty clear that we're at already. If you're saying let's say that's 90 degrees, and let's say that's 70 degrees, I think we're clear that we're going to see a snapback anytime soon. So I want to be on the snapback end to ready to catch this. Okay, Chef JPY, I'm short. You're on. We're just going to go through this real quick. You're on. I'm seeing this. Yeah, I'm seeing this as more rebalance point from here. From here to here, we never got rebalance. We never got rebalance. So we never got rebalance on this pair from this swing down. So this is it right here. We're almost there. Almost close to destination. You're on. More weakness. Pound on. Did we ever get rebalance here? Let me go ahead and mark these off. Take this off. Let's see. Yeah. Okay, so we can take this swing up here. Did we get rebalance anywhere here? Nope. Okay, let's take this rebalance and let's move it. Oh, weird. Right here, it's 50%. What's to the left? Anybody see that? Am I the only one? Looks like a good place to take a target. I agree with you. I like that. Okay, you're a cat. Okay, let's take a look at your cat. I'm more embarrassed to see rebalance. Yep, rebalance here, no problem. How about this swing to that swing? Nope. How about that swing? Yep. Okay, we rebalance from there. So in other words, I'm looking at efficiency. This is all rebalance. Nice efficiency. Okay, let's look to the swing high. Nope. Way up here. Newt. Went higher. Ooh, no. And higher. Ooh, close, but not close enough. There we are. I'm looking for this 4-hour chart. A supply there. Demand. Nope. got an imbalance there. So what that means? That means we most likely could go there. Right? That's the closest order block in terms of demand level. That makes total sense for that level. Go to 1 hour. See if there's anything. Nope. See? Maybe here. Go back to the 4 hour. Yeah, the higher level. That's what I'm looking at. Euro CAD, more down. How about pound CAD? Let's take a look. Go to the daily and see what pound CAD rebalance. From here, nope. Nope. Okay, how about what if we just go from here to here? Okay, yeah, we didn't rebalance here. We didn't rebalance here. Why would we go from here to here? Okay, well, let's take a look. Look at this swing, and let's see if we get a rebalance here. Yeah, came pretty close. Okay, so we'll take it from that swing. Because this is just like an anomaly, right? Which is just a long wick that just flash crash right there. So let's take it from this swing, and we'll take it from that high. And we did get rebalanced. Okay, we're going to take it from there. And let's look at from this perspective to see if we got a rebalance at any time soon. Nope. Nope. How about from this peak up here? Nope. How about no? Came close. All right, then we're gonna have to go higher. All right, so that is our rebalance point right here. 50%. Oh wait, hold on. Anything to the left? Oh yeah. Anything more to the left? A lot of price reaction at that level. Yep, okay. So I'm good with that. Nice and balanced there level. So with that being said, this pound CAD had reached its demand level, supply level up here. So this is why this is a very good place to short pound CAD. I like it. The pound CAD go higher? Sure. About right here. Meaning like, yeah, right here. That's about it. I don't see it going anything, up here. Like, could it go up here? Oh, yeah, sure. Anything's possible. If it does, that'd be the highest it go. But the probability, not with this very strong supply level right there. Probability is low. We did bounce off of this demand level. We're coming right back to supply level, and look like we're bouncing off of that right now. And it looks like a very good area to. We didn't take out this high. We have to take out that high for it to say it's going to go up higher. And we haven't rebalanced since this swing right here. Right. So we tried to rebalance there. It did come close, but that wasn't close enough. It looks close. And if we want to call it close, let's say we call it close. Let's say we do. Did we rebalance anywhere here? We did right there. Okay, and let's take that swing. Did we rebalance there? And the answer is yes. And yes. But I'm on the caution to say this is not close enough and very clear enough for me to say, yes, we'll rebalance very, very clear. Okay, I want a very clear rebalance. So in fact, I want to deep into the discount pocket as possible. So I feel this right here is very, very probable, especially when you have an imbalance sitting right here. It's like, why is it there? If it's, the market's been rebalancing, how come we have a big pocket, right? You can't say we have a big pocket like this one. There's a big pocket down here. Price likely coming down here. I don't think it will anytime soon. But I see this coming. Okay. So this is where I'm at with pound cash. I'm bearish. Your NCD, yeah. Let's come on down. Come on down. Okay. And this is where I'm seeing we did hit this. We came back up here. But the point is, from a higher time frame perspective on the weekly, we haven't rebalanced from this swing down here. This is where the equilibrium is at for this one. Right down here. I want to see it come down here from this weekly swing low, swing high. Okay, so I'm bearish on your NCD. Where did my indicator go? I'm working on the naked chart one. That's okay. I'm gonna go to pound NCD. Okay, pound NCD. Oops. Did I delete it? Probably did. I had it up though. There you go. Where the hell it went? Okay. Okay, how about pound NCD? Ooh, look at that one. All right, pound. Weekly, we're deep into the weekly. Deep, deep, deep. Rebalance from this low. Because if you take this low, yeah, we will rebalance already right there. So I got to take this low right here. And we are not yet rebalanced. It's a daily, I mean, weekly and daily. That is my rebalance points here, equilibrium. I'm looking for a pound NCD to at least come down there. We're creating a double top pattern. We'll come right back up to rebalance this double top. I think this is more about NCD weakness than anything. This is a very good location to take another possible short. I will take a look at the AI report real quick and see if this is something I want to take another short at and reload since it's right back at the high again. But I am bearish overall. Cash Swiss French. I am definitely bullish. So I see this not rebalanced yet from that swing high up here. So it wasn't rebalanced there. It wasn't rebalanced here. Not there. So we got ways to go. Okay, so cash preference, I'm still bullish. Euro pound, nice rebalance. We got a little bit more to go, and then we'll come back up. This thing has already been rebalanced back to 50%. This thing is well in the discount zone, so I'm looking to, would be looking to buy here or even down here. Okay, so we're definitely very clear. It can leave a little bit more to go between euro and pound, and then this will be looking bullish. Pound Swiss francs. Obviously, we broke out of that triangle wedge, and I would be looking for a pound Swiss franc to come down like that. You see this range? That's all. Just stay within that range. Odd CAD. Ooh. I'd like to see a rebalance here, but I think it's going to come back down a little bit and then go back up. Okay, so I'm bearish on odd CAD. That means NCD CAD, I would be bearish as well. It rebalance here, it rebalance here. It did a nice rebalance here. So this market is really balanced on both ends. However, so this looked like it got this order block. It needs to come and mitigate. It looked like it has a little bit more to go. And then I would say this would be ready to go long. Swiss francs. Oh, it got a lot more to go in here. This is minimum, and it's almost there. So we may see a little bit of bearishness here. Wouldn't be surprised to see that. NCD Swiss francs, same. I don't trade these pairs as much. It's not a waste. It's not even a waste. Not even my focus. In terms, it's something I look at, but I look for extreme edge, like this right here. This would be a good short on odd NCD as we're in this range. And then Euro Swiss francs. Yep. I see there's a little bit more bearishness here going back down. We may even go lower. I can see that if we break that and then come back up. Okay. And Bitcoin, how is that looking? Well, let's say it's in the channel and looking to do exactly what I said it was going to do. Well, so looking for it to come back up and then break out of that. All right. All right, so that will conclude our top-down analysis and start moving on to looking at other pairs and crosses, and I'll have this recording up for the week.